journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, one of the things that we learned over the years is that when you have a big move down, you look for a 382 retracement. This is the gold. We talked about this during the Fed time. There was the high. We dropped $85 so far. You can see there it hit it 1, 2, 3 times. And then again early this morning, just went and touched all these highs, then had the big break. Broke about $45, and now we're back up to the 382 again right now, right around this 36.78. Now, the one that we really focused on last night was this one right here, and that was the Dow Jones. Let's try it again, Larry. There's the 382 here in the Treasury bonds. There's the big move down. There was the 382 right here at 24. Our stop was above here. That made well over $1,500. And as you can see, what's happened so far this morning, if you look, you'll see that the rally back has just gone again right back to the 382, signifying that it is still in a downtrend. Now, the people in the bond market know that something must be wrong, because if interest rates are dropping, why are bonds going down? Bonds should be going up if interest rates are dropping. But that's the way they look at things these days. Now, let's talk about one other thing yesterday that was very important related to the gold market. Do you remember we were talking about this ABCD move down to here? We did take out these lows from way back here in July by about 2 pips. And I said, if that doesn't hold, I said, this means this thing is going to rally. And that means gold. When the dollar rallies, gold drops. And that's exactly what's happened. We've had a pretty good run here for 2 days. It's been as good as rally as the last time we had another rally. See, that one took about 6 days. This one only took about 2 days. So it's possibly in a rally mode. If we look at this on a smaller time frame, there's where we are now. We took off this morning. There it was yesterday. Then you pull it down here. I don't even think that was a 382. Let's just double check. I don't believe that it is. It might have been, but who knows? No, it didn't even quite make that. But that's it. The one that we were watching for that was the euro. Now let's get up here and take a quick look at the euro, because it's always a good one to trade, and it follows the numbers pretty good. Now here's the euro running up and making a new high. I believe it hit that magical level of almost 120. We got to 119. It got to 119.20. Okay, then it broke down, made a 382 retracement right here, and then it started to move down. And looking at it from just this morning, it's still doing the same thing. Now, this is an hourly chart, so we're going to watch the 382 on this one, because it's coming right back to it. Hopefully right now. Let's just double check if we can get this up. Boy, I tell you, well, folks, I'll tell you, I am just really frustrated. There it is right there. There's the 382 and that one. So that one's holding up okay. All right, now let's take a quick look here at the crude oil, because we finished with that trade. We covered our profitable position on our short on that ABCD down at this level right here. So we covered it right there. We made about $800. Last night, the market rallied up to the 61% retracement. There was a 382, and now you can see we're heading down a little more. Now, I haven't looked at it earlier in the day, since early in the day, but let's see if there might have been a 382 after the high was made. Doesn't look like it, but it came close. No cigar on this one. There's your high. There's your low. Whoa, pretty close. How close did we come? Okay, 53. It was only 4 pips away from the exact 382 level. But, we work on numbers that are pretty close, folks. So unless you shaded it by 5 or 6 ticks, you wouldn't have been able to be filled on this. So that I go right to within a point, 1 or 2 pips. That's all I give it, because I believe in these numbers so much that it gives me some pretty good confidence. Now, remember, folks, what I mentioned here, what goes up must come down. And look at this picture in the this 3 drive pattern. This is a 1, 3, 5 reverse point wave, folks. There's 1, 2, 3, 4, 5. This was known as a T6 in Gartley's book, on somewhere between pages 200 and 250. He had all these marked, and T means it was a triangle formation, triangle 1, triangle 2, and this one was made popular by Wells Wilder in the early 1990s, 91, somewhere. There's drive 1, drive 2, drive 3. They expand and look at this. It comes almost to the exact perfect tick, and now it's broken quite a bit. So anyway, just wanted to point them out that sometimes the patterns work. And I know the stock market's going to go up forever because the government is now buying Intel or buying into Intel. And next thing you know, they'll be buying Eli Lilly or one of the others to get everything up in the air, because everything's going to be copacetic for the rest of the trading world. Now let's move on and get a couple other things in here that we do want to talk about. We have to talk about Tesla. Hold on just a second. I got to get it up here so we can see it. And Tesla is right here. Now, Tesla went right up, made a little bit higher high than yesterday, folks, by about $1. Remember that number we were looking at was 425. Now, we are trading at 424.88. The high today was it got as high as 432. Now it's still back to that same number, which is that number 425 is the 786 of that move. That's what we did so far. Let's look at this on a smaller time scale so we can see where we are. Okay, you can see what happened here. There's if you like A, B, C, D, and we do, there's your AB. There's your CD, and that takes you right up here to 430. A high was 432, and that's what we're watching here today, folks, okay? Anyway, it's very frustrating for me, folks, when I see these really wild moves and I don't take advantage of them. And it's not that I'm afraid of taking them. It's just that I get a little bit overtired because I'm watching 3 or 4 positions, and I'm trying to do the ones that are the really easiest to see. This is easy, except in the heat of the battle. Look at these swings, folks. And you're talking about, this drops here from 47 right to there. That's $2,000 up, and then $4,000 up, and those are big moves. And I don't like to mess around with those. But I trade other things, and that's all I try to get in, is to get in ones that give me a chance to, not risk very much. But I really believe that we are close to something really big, and it's probably related to this. This was sent to us by one of our good friends. Here's what we have coming up. It's starting today, tomorrow, all the way through Monday on September the 21st, which will be Tuesday, I believe. I'm not sure. It's going to be the largest solar eclipse in 100 years. I don't know where we're going to have to be in it, but this is what a solar eclipse looked like. You can imagine what the ancients did when they saw something like that, because they didn't know the Earth was round until what was it, 1500s? So that's a long, long time ago. But anyway, this is going to be big. I don't know if that's what's causing all this extra stuff in the market. I really don't know. But it might be. There might be some other things. I'm just giving you some ideas. That's all I'm giving here, folks. So let's stay tuned. We got some other things to talk about when we get up. So stay with me, please.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is Oracle. Remember, we had the billion-dollar man, made $100 billion in one day. Well, it's almost everybody that bought it that day and all the next, as you can see, underwater. It's still been drifting lower. Now, this is a sign when you have a lot of emotionalism in the market, and look what's happened. I'm bringing this to your attention because I see this happening all the time. I try not to fall for it. I do sometimes, but that's what we're watching here on some of these things that we're paying attention to. Let's take a quick look at Apple, and then I want to get into a couple of grains here because they've been pretty good to us recently. Let's just get up here and put the Apple in, and we'll see where we are with Apple today. Apple, again, down on the day. Outside day, we made a higher high, lower low. Still not getting much above that 250, which, that's the old 618 retracement. So we'll see how that's going to work out. But another day of just staying in the same area of 279. The big winners, of course, have been, some of these larger Dow stocks like Goldman Sachs and a few of the others. But that's what we're watching as we see these folks. I really feel strongly that we are somewhere near something that's going to be very, very, it's going to be hurtful to a lot of people that stay long. And I tell you this with a great deal of experience because I've been through it several times. And one of my favorite books, of course, is by Bernard Baruch, who was J.P. Morgan's best friend during the 30s and stuff. And Baruch was a really financial genius. He was probably equivalent to one of those AI guys like Musk and some of the others during the time because he was short all the way down in the market. And his favorite saying, when he was meeting with Fanny Brice, who was the leading actress at the time, she asked him, how do you make money in the market? He said, well, you buy low and sell high. And she says, how do I do that? And he said, do you have about 40 years? Well, I've been in at 60, so I should be ready. So I'm just watching here. The reason why markets do go down faster than they go up, you can see that from right here. The question is when, and that's why you have to take a few tries at it before you finally get it right. Okay, I was expecting a top on the 1st of September. Here we are 18 days later, and it still hasn't gone down. This happened again in 2008. The market went 3.5 weeks before it finally turned down, and then it went down 87%. We're going to see something like that starting very, very shortly. So just stay tuned, and we'll be in the picture when it's ready. That's all I can tell you. All I want to see now is we've had a pretty good jump up and down, but nothing that stays very long. All of the lows yesterday, folks, just take a look at this. Well, you can see it from the take a look at there's your, I want you to see the stop stuttering, bozo. Okay, here was the low that we watch the 382 retracements here, folks. There's your first one right here off the top. Where do you go to? You went to right there. That led to this top, which was yesterday, okay? Now, this low right here, there was your 382 from this low way back here. Misses it by just a little bit, and we're still in this area. Okay, that's why it's so very important to pay attention to these 382s. There's your 1.618. It hasn't taken it out yet. It probably will, and it could go a lot higher. But when they do roll over, it's going to look like that beginning of that coffee chart. But it might not be in our lifetime. I see that Tesla just picked up a lot of steam here. In just a few minutes ago, you'll see we're back above the magical 425 level. We got as high as 432. So, well, all right. Let's take a look at this. Let's take a look at Tesla just to see if this stuff actually works. Well, I can see the first one was below. You can see the first three. There was your first retracement right here. Then you made another higher high, and that one also came right down to the 618, just about the 618. And this has been the low today. That should be the 382 off of this number right here. Let's just double check because it's a strong trend, and you're going to find the 382s, and there it is right there. It stopped right there at 420. It's now at 426. So that's what we're watching. We're almost at the number here in the, well, we've hit it, I think, have we not? No, the number in the Russell is of 2489, somewhere in that ballpark. Not that that means anything. It's just a number, just like anything else. But the markets are still acting strong. But the good news is, folks, the government is getting into the stocks because they're loaning money to the stock companies and getting stock like Intel, which is, let's take a look at Intel today. It's only up like 8% because the government has put a bunch of money into it. Let's just take a look at Intel. Those of you that got the message yesterday, you can see Intel. It's been a dog of the market for God knows how many years. This is a daily chart, folks. Look at this. Remember yesterday I said you ought to take a look at buying Intel? I didn't do anything like that. But anyway, you can see there was the government's in it, and there's where it's going. Let's look at this on the long-term basis. Put a weekly up. Good luck. There's the 4. It's making a 382 retracement, a little above it right now. But this stock used to be way back in the day. It was about 80 or 100, something like that. It was a lot. But this is what's happening now with these markets. A lot of emotionalism in here, so don't get caught up too much in it. I think you'll be okay, but maybe so, maybe not. You're going to be okay with me because I'm not going to take any big losses. I'm going to take some losses, but I'm not going to take any big ones. Jeff Hughes is our guest coming up here right now, and we will get this out of the way here. And I had one other question about the grain markets. We're going to look at the wheat because we've got out of our wheat at 533. Hold on one second. Get it back up here. We're going to find a place to buy the December wheat here again very, very shortly. Okay, there's where we got out. Let's put the hourly up so you'll be able to see there was our ABCD pattern right up in here. Okay, we bought it at 20 on the pullback right there. That's where we bought it on that 382 pullback right there. There was the 382 right there at 420. There it is right there. We bought that 382 and then we got out of it right there. And now we have an ABCD coming down, one of our favorites here in the wheat, and we still think the bottom is in. So we got to be ready to buy some wheat, maybe today. Let's look at it. You can see here ABCD right here. Oh, we got 22. That'd be down about 11 cents. So keep an eye on the wheat here at 422. And it's going to be close. And guess what? I'm going to be buying it. So why can't you buy this? Okay, let's just go through this for kicks and giggles, because if you believe in this stuff, you got to follow what you say. And you got to say you buy the ABCDs in an up market. And this is an ABCD. There's X. There's A right there, well, A or B. A, B, C, and D comes in right about here. 618 comes in here at 22, and it's trading at 24. So you're going to buy it here at 5. Let's write that in, 522, 522. That doesn't look like a 2, Larry. That looks like a 3. This looks like a 2. Buy it at 522. And just in case you're wrong, like you are 40, 50% of the time, you want to put in a stop at, let me see, 518. 518, that means you'd be risking $200. You just made $600, so risking $200 isn't too bad. So I'd buy it there and the stop below there. So there's your 618. There's your ABCD. That's what Gartley teaches. He says, buy the first ABCD in a new bull market. This might be a new bull market. And again, it might not. Who knows that? God. And she doesn't trade. So let's keep an eye on this, okay, folks? We'll be right back with Jeff Hughes of Alpha Insights. Stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, Jeff is busy right now, but he'll try to get on in just a second. So whoever sent me this, hey, I'm going to make a statement here, folks. I said it was going to be a solar eclipse, and it's a partial solar eclipse. That's a little bit different. Jeff, good having you on. 1 second, I'll have your page up. We're looking at margin debt. Shut the front door and raise the rent. Boy, oh boy, I don't know what that is, but I think I'll buy some margin debt. It looks like it's going up.
Yeah, it's a bull market in debt, isn't it? And this is speculation. Wow. People borrowing money to buy stocks, using the stocks that they own as collateral, Larry. And so, of course, that margin debt is supported by the price of the S&P 500 for all practical purposes. And if the price of the S&P 500 goes down, well, then you're going to get margin calls. And with margin debt over $1 trillion right now, the potential for an absolute, washout margin call has never been higher than it is today.
Yeah, well, it's coming, buddy. I know that, and the reason why I know is when the furnace gets hot and the stove is on fire, I know it's my time to dance. So I'm just waiting. I've tried a few times today or yesterday, and they looked like they were going to work pretty good. One time it had 60 handle profit. Next thing I know, I lost 20 handles. So, and that only took about 20 minutes. So it's a little crazy. But anyway, this leverage thing is getting out of whack too a little bit, isn't it?
Well, yeah. So, we talked about, leverage in the stock market. But if you take that margin debt divided by the money supply, it is now at the third highest level in history. The highest, the peak, of course, was the dot-com bubble. Things got extremely out of whack in that respect. In 2027, it was just only slightly worse, and now it's just slightly worse than it was in 2007. And so, 2025 peak is, it's kind of a way to look at investor sentiment. It is extreme bullishness based on the amount of leverage relative to the money supply today.
Okay, and then your equity allocation is busted into new high ground too, isn't it?
It is. 55% is kind of where the one standard deviation above the 25-year mean comes into play. We're basically there right now. We've only been above that level twice before in history, once at a very extreme level, again in July of 2000, where it got to about 60%. And, of course, back during the preceding the great financial crisis, things got very, very heated up as well, above 55%. So, right now, equity allocations are as high as they've been since the pre-great financial crisis era. And usually when you get to this level, it precedes a deterioration in basically the market. And so, these are, again, kind of a sentiment indicator where, basically all systems go. Investors are as bullish as they've been since before the great financial crisis.
Okay, the next chart I think you misplaced because it looks like a backgammon board.
Well, this is the dot plot, and this is what they put out when the FOMC meeting met on a quarterly basis yesterday. And so it gives all of the members of the FOMC an opportunity to, state where they think interest rates are going. And right now, if you look at the far side of this, there's a bunch of dots, right? And some of them have red boxes around them, et cetera. Well, there's right now no consensus among these Fed governors. One of them thinks that we're actually going to hike rates before the end of the year. Another one thinks we're going to cut rates by another 125 basis points, or 5 25 basis point cuts. 5 members don't expect the Fed to cut at all for the rest of the year. And then the remaining 9 or so actually believe that, we're going to see another couple of cuts. And that seems to be where the consensus is right now. The point of this is that the dot plot suggests that there's a lot of contradictions right now within the Fed. There's no real consensus. There's nobody really has their hands on the wheel with any sense of where we're headed. So there's a lot of confusion, a lot of disagreement among that body, which makes one of the most important decisions for the economy.
Wow, that's really good. Now here's the Dow Jones priced in honest money. I thought all money was honest.
Well, gold is the most honest of all monies, right?
Yeah,
and
that's
what
correct.
We've done here is we're looking at a chart of the Dow divided by gold. And what we've seen since back in 1920 is 4 bull markets and 4 secular bear markets. Well, based on this, it looks like the move from the 2009 low to present was the latest bull market that ended earlier this year. And we are now in the early stages of what is likely to prove to be a secular bear market in the Dow Jones priced in gold. So, and the question is, how long will it last? Well, past secular bear markets have ranged between 9 and 20 years. So this could be a relatively long period of time. And, if the Fed continues to pump out massive amounts of money printing by monetizing the Treasury's debt, then we could maybe extend it a little bit longer. But, we're reaching that point of that tipping point where capital markets, especially the bond market, isn't going to take it anymore.
Wow. We live in interesting times, my friend, and here is our favorite Elliott wave count: a 1 and a 2 and a 3 and a 4 and a 5. Boy, this certainly looks interesting, that's for sure.
From our perspective, we are in what's defined as an ending diagonal pattern. That's typically in the 5th wave of a long motive wave structure. And what it is defined by is 2 converging trend lines. Now, we've shot over the top of that upper boundary, which connects the top of wave 1 and wave 3, and that's known as a throwover. Throwovers typically extend somewhere between 1 and 2%. 2% would actually be 66.62. And we haven't quite gotten there yet. The high so far has been 66.56. So, a 2% throwover would be at 66.62. We don't think we're going to get beyond that sustainably, and we would expect a move back into the pattern. And there's a date that shall live in infamy coming up on Monday, according to Paul McCrae Montgomery, and that's the autumnal equinox, September 22nd. That date has historically marked the tops or bottoms for some of the greatest bull and bear markets in history. And this goes across asset classes. And right now, just looking at all risk assets, everything is at an all-time record high today. Our suspicion is, if you forward the chart to the next chart, looking on a very short-term basis, we are looking at really another session, tomorrow's session, possibly to get to that 66, 62, and then Monday's session could be a big reversal. And
stay with us.
Major bear market.
Stay with us, Jeff. We got another segment coming. They're on the edge of their seats, so stay with us.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we have Jeff Huge on the line. And Jeff, I have a great deal of trying not to say this, but I have to. Folks, take a look at this section of stocks that he's in. And he's been as bearish as I have, yet he's making money in a lot of different things. That's just an attestament to your way you spread out your equity and do your stock picking, Jeff. You should be really proud of this. I don't know if people focus on it when they look at something like this, but you've got 9 trades here, and you've got 8 big winners and 1 small loser. Not many people can say that, and I think it's really a test to what you're doing, pal. So keep it up.
Well, thanks, Larry. You know, it's a market of stocks, right? You know, the stock market itself, the S&P 500, is so highly concentrated in just a handful of names. The top 10 stocks represent 45% of the market cap and have the biggest influence on the performance. Those stocks are not outperforming dramatically. In other words, there are plenty of other opportunities across the equity spectrum where you can make money based on its relative strength, leadership, and the technical setups in these specific constituents and areas of the market. And so we're using ETFs, of course, to get broader exposure, but we're trying to find setups that make sense, that give us an opportunity to capitalize on an immediate momentum-based move. And so, you know, the performance relative to the market is going to be significantly greater as these trades pan out. And we use a stop loss, of course, to protect our capital on the downside. So, you know, there's limited downside, and that is our process, right? And we run our strategic and tactical asset allocation models the same way.
Well, and I see the next slide shows the fact that you're ahead of the S&P by almost 10%, given that broad spectrum of things that you're looking at. That's really spectacular, my friend. I think next thing.
All I was going to say is that, you know, I only have about 25% total equity market exposure in this portfolio. The rest of it is actually coming from alternatives like metals, gold, silver, Gold mining shares have really been the biggest contributors, but we've been especially long foreign markets, especially emerging markets, which have dramatically outperformed the S&P 500 year to date.
Okay, we have a question for one of our listeners, and that is, what's your opinion on the bond market?
Well, I'm kind of split, to be honest with you. I kind of
you
feel
sound like somebody on the Federal Reserve. They're split too.
I don't know how this inflation unemployment balance is going to play out. I mean, we could be on the precipice of a recession. Under that circumstance, long duration bonds should do very, very well. On the other hand, if the Fed's successful in reigniting the flames of commerce, so to speak, then we could very well see short rates come down more, and that would probably not bode well. So we've got a split bet on. We've got mostly T-bills, but some long duration treasuries as well, just to try and play this. And right now that setup looks viable, and as soon as it doesn't, we'll cover. But yeah, I mean, I have been advocating really for more of a bear steepener, right? And that means that long rates could go up as short rates come down. And so that would be my preferable way to play this longer term. But in the short run, we haven't started to really see that trade pick up steam yet.
Okay, that makes really good use. And also, let's tell the folks how to get this wonderful newsletter that you have, because it's a winner.
Yeah, and I'll also say that for any of your viewers who are interested, we'll offer a special rate of $99 for a 1-year subscription. The next publication of the newsletter, Huge Insights, The Big Picture, is due out on October 4th. That's the first Saturday of the month we come out. You can find it at hugeinsights.substack.com, or you can find us on X at alpha_insights. Otherwise, you can go to our website, which is jwhinvestment.com, and send us an email and just let us know that you're interested in the special, and we'll send you a link to a special coupon. Normally, we our rate for an annual subscription is $180 or $25 a month, so it's a substantial discount of 45% off for an annual subscription if you take advantage of this.
Well worth the money. And listen, thank you for joining us today, and we're going to have you on again soon. What I've decided to do, Jeff, is have you on the next time we have a down day in the stock market. So set sometime in November. Maybe we might have a down day by then, and we'll have you back on again.
Might be Monday.
Keep those cards and letters coming in. You've got a great letter, Jeff. You should be proud of yourself.
Thank you, Larry. I appreciate you having me on the show today. Take care.
You bet. Okay, folks, let's get back to looking at some of the things that I think I know about that actually don't. Let's get this up here. I'm sorry about that thing, but hold on, let me get this out of the way, about the eclipse, because I have it written on a piece of paper here, and also in the newsletter, there's a partial eclipse, and that's why, we were watching it very, very closely. Okay, now you notice Tesla's still messing around up in here. Let's see how our gold is doing, see if it stayed above the right near this 382 like it was supposed to. And whoops, let's get it out of the way here. Yeah, well, there's right at another 382 again, so it's still heading down. Let's look at this on a little bit longer time scale. We'll go back to an hourly chart because we hit some pretty strong resistance. See how we are here? Look, folks, we start taking this out here. That means that everybody that's bought this in the last 10 days is underwater, and that's going to be the first time that's happened since Hector was a pup, and that dog's 19 years old. You can see, let's just look at that number, because if we get below 55, well, that's the key number. Yeah, if we get below 55, that's right there. That tells us that this thing is really breaking down hard. See, there's your first 382. There's your second 382. You go below here. Trouble in River City. And that's only $22 away, folks. So believe me, at $22, some folks here are going to be really, really nervous, okay? So that's why, look, but the one thing we should do is we should look at the old 382, because that leads you to the promised land more than anything else. So we're going to get up here. We've got something to look at. There's our biggest, second biggest this is our biggest correction. We got something to talk about here, folks. Look at this. There's your first big, Larry, Doug, got it, do the right thing here. All right, there's where we are right there. That was the first big correction. Okay, then Hail Mary, full of grace, please keep me in place. There was a second big one, and now look at this. We've already gone. There was a third one. Now we got another one coming right here. All right, so let's look at the 382 of the whole thing, because there's the first one, and we went to the 50%, not quite to the 50% today, so we're already through the 50, already through the 382, and that means we're heading lower. Getting below here really is going to set up, because that means in the last 10 days, everybody that bought gold will be losing, and that's only another $20 from where it is right now. So we start getting down there. It's probably going to start accelerating to the downside, because we do know one thing: markets come down faster than they go up. No question about that. Am I correct? Raise your hand, Johnny. Yes, that's correct. You are correct at that. So let's take a little break. We'll get back and get your sandwiches ready. Put the mustard on. We got more bologna coming.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this started the show with the NASDAQ showing the wild volatility, the ABCD to the downside, the big move up. I mean, you're talking about big moves, folks. There's a couple $1,000s down, a couple more $1,000s up. We're right back at the 382 again with 2 hours to go in the market, and it looks like we could still go higher. Now, when we talk to Jeff and listen to what he has to say, folks, that chart of the margin debt is, oh dear. I mean, this is like mother, God, and country, folks. Don't get too excited about being long stocks up in here, no matter what the joke is or what they're trying to tell you. But this picture right here, if I can find the darn thing. Oh, let me show you one. Here, look at this. We're in the midst of a wonderful housing market. Look at this, folks. Look what lumber has done here. Look at this. We just made a 382 retracement, A, B, C, D. Lumber back here was a $1,700 a board foot. Now it's trading for $500 a board foot. And this is a bull market in real estate. I know prices are going up. That's because not many people are selling, but this ought to be a little scary. This is very uninflationary, I would think, but I don't know. That's my 2 cents worth, and I'm sticking to it. So that's another one, but I want to mention that other one, and I can't remember. It's about I know where it is. Hold on just a second. It's on this one right here. I think this is the one. Yeah, this is it. This shows you what we are compared to where we were in other dot-com bubbles. 1970, 1980, 1990, 2000, 2010, 2025. We are 3 times higher than the dot-com bubble. And from there, the market gave back 87%. So maybe it'll have a 5% correction in here someday. Let's not hopefully we get caught in that 5% correction. So live every day in an attitude of gratitude, and may God bless.